Terra's stablecoin UST fell off its dollar peg by 40%, highlighting the risks that algorithmic stablecoins carry, and Luna, the native token of the Terra project, collapsed as the chaos unfolded. UST has long been considered the poster child of the algorithmic stablecoin fold, utilizing an internal algorithm to manage the balance of supply and demand to maintain its dollar peg. Algorithmic stablecoins have been a holy grail of sorts for developers, but in reality, many have crashed and burned along the way. Looking at Terra specifically, 1 UST is redeemable for $1 of Luna in a mechanism that incentivizes arbitrageurs to buy UST when it trades under $1. They then redeem it for $1 of Luna and sell the Luna for a profit. On the flip side, when UST trades above $1, investors can mint UST with $1 of Luna and sell the UST for a profit. Problems arose on May 6th when $500 million of UST was sold, creating a crisis of confidence in the protocol, which openly had the aim of becoming the second largest holder of Bitcoin after Satoshi. The shock move caused Terra to allegedly sell sizable chunks of its Bitcoin holdings to plug the gap, compounding the selling pressure across the market. And in a nutshell, that is the systemic risk that algorithmic stablecoins pose. If the peg cannot be maintained organically, then projects have to offload their treasuries to prop things up. And that creates panic as investors anticipate this selling and offload their assets first. But not everybody in the stablecoin field has taken the algorithmic approach. Peter Thiel, Sam Altman, and Coinbase are notable investors in a stablecoin project called Reserve that has long warned about the risks of algo stables. And while Reserve is close to launching a far more expansive mainnet that will allow users to create their own asset-backed stablecoins, its core stablecoin, RSV, maintains its peg by operating a basket of stablecoins which can be swapped in and out as market conditions dictate. Currently, this basket is made up in equal parts of TUSD, PAX, and USDC, meaning that each RSV is initially redeemable with the Reserve smart contracts for 1/3 TUSD plus 1/3 PAX plus 1/3 USDC. Reserve has taken a lot of flack from the investing community for its slow development process, but the team have repeatedly pushed back, saying that they would rather learn from market developments and get it right the first time than end up, well, in a situation like Terra. Only time will tell what happens when a slower, calculated approach offers contrast to Terra's strategy of trying to dominate the market within a year. But if we can be sure of one thing, having the collecting know-how of pioneers like Peter Thiel and Sam Altman on board means that short-term decision-making is probably off the table.